Morning, Steve Free in Chicago with the morning grain comments. Well, each day it gets harder to trade soybeans. Yesterday, soybean market was up sharply on talks that U.S. and China might start negotiations on their trade issues. Overnight, the administration said they may go ahead and put a 25% tariff on $200 billion worth of Chinese goods. So beans are down 14 cents right now. Yesterday, the noon weather maps started talking about the change in U.S. weather pattern, going from a ridge pattern to maybe normal rains and normal temps. And overnight, the maps suggested that after next week. So if we do get rains in August for much of the Midwest and the temperatures are not as hot, that's good for crops. So beans right now is very hard to trade, and I would say long term, if there's no negotiations, soybean prices should go lower. As far as corn and wheat is concerned, it's kind of the opposite is true in that, first of all, in corn, we look at lower crops globally maybe adding to corn demand, and then also if yields don't get better here in the United States or don't approach the 178 yield and it's closer to the USDA's 174, corn's tight, and it should see a bounce in prices after harvest. So that is supportive. In the wheat market, some people think that the USDA should lower European wheat production 5 million tons and lower Australia production 5 million tons. Now, not all of that will come to the United States, but it does seem like there are no offers after November for Russian wheat exports. So that could help the wheat market. So some people think that beans at $9 is too high, corn at $3.70, $3.80 is too low, and that wheat at $5.50 or $5.60 is also too low. So we'll see how things kind of unfold. As we get closer to the August 10th crop report, USDA's got a lot of issues that they need to resolve. In July, they lowered bean exports 250 million bushels and raised the carryout. Do they reverse that if there's an agreement? Or do they kind of keep things the way they are? Do they raise the soybean crop and raise the carrot, which would be bearish to prices? In corn, do they raise the demand? Do they keep the yield unchanged? And do they lower the carrot, which would be friendly? And in wheat, do they make these changes globally to wheat production and add to the wheat U.S. demand, which would be positive to wheat? So a lot of things could happen on August 10th to make things gyration. The one thing that people are asking, though, is number one, is there enough information out there that the funds to cover their shorts in beans and corn and add to their wheat long? And number two, what's the farmer going to do? Is he going to sell this rally? Is he going to wait? Right now, a lot of people are suggesting that farmers here in the United States should store their corn and sell their beans. Also, if there is trade negotiations, will they see any of this $12 billion aid that's suggested to go out to them at the end of September or early October? So we'll be watching weather, we'll be watching tweets, and we'll be watching the money flow to see where these markets are going. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.